Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ZOOMINFO Technologies INC quarterly report. ZOOMINFO Technologies Inc. offers a range of businesses and services through its go-to-market intelligence and engagement platform. The company's main products include ZOOMINFO Copilot, ZOOMINFO Sales, ZOOMINFO Marketing, ZOOMINFO Operations, ZOOMINFO Talent, ZOOMINFO Lite. These paid products cater to various industries, including software, business services, manufacturing, telecommunications, financial services, media and internet, transportation, education, hospitality, and real estate. Der Aktienkurs von ZOOMINFO Technologies Inc. Im Vergingen Jar blieb weitgehend stable, mit einer Kursänderung von weniger als 447%. Es ist schwierig, ein Definitivlist der Ergebnisse zu erstellen, die dazu geführt haben, dass der Kurs keinen signifikanten Veränderungen erfahren hat. Allerdings gibt es mehrere bemerkenswerte Nachrichten im Zusammenhang mit ZOOMINFO Technologies Inc. Darunter die Veröffentlichung der Q3 2025 Ergebnisse, bei denen des Unternehmen die Erwartungen der Wall Street Übertraf und seine Umsatzprognose für das Gesamtjahr 2025 anheben musste. Die Partnerschaft mit Marcas, des Global Geschäftswachstums und Risikomanagement neu zu definieren, Insider-Handelsaktivitäten und der Aktienrückkaufplan. Es ist jedoch schwierig, eine direkte Zuordnung einer präzisen prozentualen Veränderung zu einem einzelnen Nachrichtenereignis vorzunehmen. Der Kurs von ZOOMINFO Technologies Inc. blieb im letzten Jahr stable, mit einem 52-Wochen-Bereich von $701 bis $1,339. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, an increase in subscription revenue, sales of new products and services, and adoption of modern go-to-market software are significant contributors. Expansion into new markets, ability to deliver high-quality intelligence at scale, acquiring new customers, increasing usage of the platform, moving upmarket to larger customers, and expanding relationships with existing customers also drive growth. On the decline side, a decrease in professional services revenue, competition from other providers, and dependence on third-party data sources are major factors. These drivers highlight the importance of diversifying revenue streams, staying competitive, and managing external dependencies to ensure sustained growth. Net income and profit margins. A shift in performance. The financial performance of a company underwent significant changes between 2024 and 2025. Net income experienced a substantial increase, rising by 518% from $14.5 million to $89.5 million in 2025. This growth was driven by higher revenue and lower expenses. However, the profit margins showed mixed results. The operating income margin increased from 7% in 2024 to 18% in 2025, indicating improved profitability. On the other hand, the adjusted operating income margin remained unchanged at 35%. Despite this, net income as a percentage of operating activities saw a significant increase in 2025. The decrease in net income in Q3 2025 was attributed to higher income tax expense and increased interest expense. Nevertheless, the overall trend suggests that the company's financial performance improved significantly in 2025, driven by increased revenue and better cost management. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. In 2025, the company achieved a substantial increase of $61.5 million in positive operating cash flow compared to the previous year. This upward trend suggests that the company is effectively managing its resources and generating sufficient cash to support its business activities. The company's debt level has undergone significant fluctuations over the past year. Initially, it decreased by $34.9 million from December 31, 2024 to September 30, 2025, page 33. However, this trend was reversed as total debt increased by $97.2 million from $1,227.7 million to $1,324.9 million, page 36. Furthermore, the company drew $100 million of its available $250 million under its first lien revolving credit facility, indicating a notable increase in debt level. Regarding interest expenses, there is a mixed picture. For the 3 months ended September 30, 2025, interest expense decreased by $3.6 million from $47.7 million to $44.1 million, page 7. However, for the 9 months ended September 30, 2025, it increased by $1.9 million from $29.5 million to $32 million, page 50, and also by $2.5 million from $29.5 million to $32 million, page 61. Notably, interest expense saw a significant increase of 20% for the 3 months ended September 30, 2025, from $9.6 million to $11.5 million, page 59. Overall, while there are some discrepancies in the data, it appears that both debt levels and interest expenses have undergone notable changes over the past year. The financial performance of the company's segments varied significantly in the 3 and 9-month periods ending September 30, 2025. In terms of performance, the United States segment stood out as a strong performer, with revenue increasing by $14.2 million to $280.7 million over the 3 months, and by $27 million to $820.4 million over the 9 months. This growth indicates a robust market presence and customer demand in the U.S. On the other hand, the Rest of World segment struggled, with revenue remaining relatively flat over the 3 months and decreasing by $1.8 million to $110 million over the 9 months. This decline suggests challenges in international markets, potentially due to economic or competitive factors. Management's outlook and strategy. A positive note: management is optimistic about the company's outlook, citing an increase in income from operations of $105 million and a significant improvement in operating income margin, from 7% to 18%. They attribute this progress to their strategy of focusing on high-value customers and investing in sales and marketing capacity. The company plans to continue growing its customer base, expanding relationships with existing ones, and moving upmarket over the long term. Management expects gross margin fluctuations due to various factors, but is committed to investing in cost of service to enable future growth. They anticipate restructuring and transaction-related expenses will vary significantly from historic levels due to potential acquisitions and strategic restructuring efforts. The company's cash flows from operations and available cash are expected to be adequate to fund operating and capital needs for at least the next 12 months, with management confident that they can remain in compliance with credit agreement covenants. However, they may make future acquisitions, which could require additional debt or equity financing and drive additional cash expenditures. Overall, management's outlook is positive, driven by their focus on high-value customers, strategic investments, and a commitment to long-term growth. The company's financial summary reveals a notable trend in its capital allocation strategy. Specifically, it has engaged in share buybacks, repurchasing 12,431,216 shares at a total cost of $125 million. This indicates that instead of distributing profits to shareholders through dividend payments, the company has chosen to retain earnings and reduce its outstanding share count. That concludes the financial summary for ZOOMINFO Technologies Inc. Feel free to comment below, and I will be happy to answer them when possible.